Hey, what's up, you cool cats and kittens? Coming at you live from my living room. Well, live now. It won't be live when you watch it because I will have already recorded it and posted it. But it is live now, technically. So today we're going to be talking about macroeconomics. But we're going to start with a little bit of micro so that you can at least understand where we're going here because we are changing gears pretty significantly. I'm going to be talking about money, how it's distributed, and how the government takes a lot of it. So, we have a clip here. This movie is Jerry Maguire, and it has a very famous scene, two very famous scenes actually. One, including "You had me at hello," the other is the following.
I need to feel you, Jerry! Show me the money! Jerry, you better yell! Show me the money! Show me the money!
So if you don't know that scene, I'm sure you have at least uttered those words at some point in your life. And if you've always wondered where they come from, look no more. Jerry Maguire, 1996 or something, I think. So first we're going to talk about taxes here. And one of my favorite quotes up here in the corner, in this world, nothing is certain but death and taxes. And that is incredibly true. Taxes are a certainty in life, and you're going to have to pay them. The good news is you get something from it. So when you pay your taxes, our government provides services that we as citizens otherwise couldn't provide as individuals, and gives us cool stuff like interstates, roads to drive on, hospitals, police force, things like that. A little meme in the corner there too. I wish complaining about taxes was tax deductible, don't we all? But income tax itself is self-explanatory in that it is a tax on your income, and it is the single largest source of revenue for the federal government. They make an overwhelming majority of their revenue from income tax. The other pieces of their revenue come from things such as excise taxes, which we've talked about before, which are taxes on goods that are deemed unnecessary to sustain life, essential, if you will, essential items. So it's made up of a lot of different things, but excise taxes being a big one, individual income tax being the biggest. We also have import duties, which are things that come in from foreign countries that we charge fees for since they weren't produced here in the United States. So let's start by defining taxes so that we have a baseline from which we can move forward with. Taxes are payments made by individuals and businesses to support the activities of government. Now, there are a lot of different opinions and viewpoints when it comes to taxes. We pay too much, we pay too little. The rich should pay more. Everybody should pay the same. We should go to sales tax. There's all kinds of different ways. And if we were live in class, we would compare them and put them on the board and do the whole deal. But, the world we're living in right now with the distance learning, it's more likely going to be something that pops up on Google Classroom, and we have a quick discussion on it. But what we live in now is you pay a certain percent based on how much money you make. And how much money you make is something called your taxable income. And the tax levied on you depends on what your taxable income is. And that can fluctuate quite a bit when we take into account things that we're going to learn a little bit later, including tax deductions or the better tax credit, which directly reduces the amount an individual owes on their income taxes. So, taxable income by definition is the total income of an individual minus those deductions, exemptions, and then finally, after we determine how much you owe in taxes, that tax credit, which lowers how much you owe. So, what are some examples of exemptions or deductions? Well, it's changed pretty recently in the last few years, for the worse for some people, for the better for others. So, some of the things that are still tax deductible, though, are donations to charities, which are nonprofits. For those of you asking the question that I know you're thinking in your head, those are the businesses that have filed 501c, which, of course, as everyone knows, is the document that determines that they are a nonprofit organization, which means they don't make any money. So in order for a donation to be tax deductible, it has to go to a charity that is a 501c, as in cat, as in Big Cat Rescue, and it needs to be a donation, and you need to provide a receipt in case of audit, but that amount of money can directly lower your taxable income, which lowers how much money you owe. Student loan interest is another one. This most recently has been capped at $2,500 previously to 2018, and the 2018 file year, which was 2019. That number did not have a cap. So those of us with student loan interest have a higher taxable income than we did previously. And the most common tax deduction or exemption, which all of you know is my absolute nightmare, are dependents, which usually are in the form of your offspring, your children. It's basically a person who depends primarily on another person for their existence, to be alive. Generally, it does not apply to parents who are still making a salary or are retired, but it can apply to them if you are providing more than 60% of their support, paying more than 60% of their bills. So those deductions and exemptions can really add up when it comes to the end of the year. Here in the United States, our income taxes are what are known as progressive. And basically what this means is that the more you make, the more you pay. So, and I don't just mean 9% of a million is greater than 9% of 100,000. I mean, if you make $1 million, the percent you pay in taxes increases. So, for example, there's a chart here from 2016. I have the chart from 2019 up in another window. So we'll take a look at both just to see how they've kind of changed here. But in 2016, if you were a single filer, meaning you were not married, and you made between $9,275 and $37,650, 15% of that is going to Uncle Sam, as they say. So you're going to lose 15% of that. However, if you were to get some sort of raise and you go over that threshold of $37,650, you would move into the 25% income tax bracket. So you will pay a higher percentage of your income in taxes the more you make. So it literally does cost more money to be rich, but generally it can be afforded. So let's switch here to the 2019 bracket. As you can see over here on the right-hand side, it's a little bit different. All personal exemptions have been eliminated from tax deductions. You can't have them anymore, unfortunately. The only way you could is if it was in excess of the standard deduction, which is $12,200 for an individual and $24,400 for married filers. Generally speaking, almost no one qualifies for the personal exemption because the standard deduction is more. So some of you may be asking, what is a standard deduction? Well, it's pretty simple. You add up your gross income, which is all of the money you made before taxes, and you subtract the standard deduction from that, which in the single case would be $12,200. So let's say, for example, you made exactly $40,000, and you were looking at this tax bracket. You would think that you would fall into the 22% category here, but minus that standard deduction of $12,200, we're looking at $37,800, which actually drops you down to that 12% tax bracket, which means you could be expecting a big tax return, which, as you've heard me say multiple times, isn't necessarily the best thing, but a lot of people like that. All right. So moving on, we have a picture of a guy here. Some of you may recognize. Feel free to yell it out at your computers. Nobody's listening, so go ahead. That is Al Capone. He was a gangster, famous in the 1930s for an organized crime ring that was run mainly on the East Coast. Al Capone was accused of many crimes, including drug smuggling, selling, murder for hire, murder, extortion, money laundering, all kinds of first-degree felonies under federal law and of most state laws. However, Al Capone was never sent to prison for any of these things. In fact, the thing he was sent to prison for was tax evasion. And that leads us back to my initial quote there. Nothing is certain but death and taxes. And Al Capone did both in prison. Once he was in there for tax evasion, he died very quickly from a condition called neurosyphilis, which I cannot recommend any less for you not to look that up. Do not search that. It's disgusting. Don't check it out. But he did die pretty rapidly after that. The deadline to file your taxes every year is April 15th, and this is known as Tax Day. However, we are in a very unique situation here in 2020. If you didn't know already, there's a virus out there called COVID, which has delayed Tax Day until July 15th for the first time in a very, very long time. So, how come we don't have to write the government a big check every April? Well, throughout the year, your employer, assuming that you're not self-employed or own your own business, will withhold a certain amount of money from your pay for you throughout the year, and that money will be given to the government on your behalf rather than paying it as a lump sum on April 15th every year. Now, this is good for the most part because, we're Americans. We like to buy stuff. We like things. So if we have a large sum of money sitting in a bank account, it can be difficult for some people to be disciplined enough to let that money sit there and write that check at the end of the year. So it allows us to budget better so that we don't have to account for those things. And then after January 1st, we have to file our taxes for the previous year, where we find out exactly how much we owe. And if we paid more than we were supposed to, you'll get a tax refund. If you paid less, you will have to pay more in your taxes to the government. Now, I know we've talked about this before, but tax refunds are essentially the government giving you back your own money. So a lot of people treat it as a bonus or as the government giving you some money, but it's really important to understand that that money isn't that. It is, in fact, your own money being given back to you after someone else held it for you for a while. And I don't know about you, but I'd rather have my money right away. But it's all personal preference. If you want a big tax return, feel free to go ahead and keep your withholding pay up, because that's what this is known as. When your employer takes money out of your paycheck and holds it for you and pays it to the government on your behalf, this is known as withholding. And some of you may be asking, it's very common, right? To be self-employed, particularly when you go to a CTC. A lot of you I hear say, I want to own my own car, car shop, or I want to open my own HVAC business, and that's great. It's fantastic. Those types of businesses are absolutely the backbone of the United States, and they're hurting right now, and we need to make sure that we do everything we can to help them out. So what do we do if we're self-employed? What do we do if we're the only employee or if you're the owner of the business? Well, there's an easy way to do this, and it's quarterly payments of your taxes. So rather than, again, having to have that big chunk of money when tax time rolls around on April 15th, what they can do is take your previous year's income, and they can basically make a good guess as to what you're going to owe for the following year. And you split that into 4, and you pay that every 3 months. And then at the end of the year, you file your taxes just like anybody else, only a little bit different because you are the business. You own it. So you'll have to get a different type of tax preparation. They'll take a look at it, and they'll see whether you're going to get a return or whether you're going to owe a little bit more in excess of those. So who's in charge of making sure that we pay our taxes? This is the IRS, which is short for the Internal Revenue Service, and they are responsible for receiving and processing those tax returns to make sure each and every American citizen is paying their taxes so that all the services that are provided by our government can continue to function as they are designed without a hitch, so that that money can go and support those things that we need, infrastructure items, again, hospitals, police, firefighters, interstate systems, things that we want to have access to every day or that we use every day. It's crucial. And there are other pieces of the tax spending that goes into this that we're going to discuss at a later time, because it's a little much. So We're going to build onto that, but there's a lot more things your taxes go to pay for, but they do go to pay for those important things. So the IRS obviously can't go through and check everybody's tax return. It would take an entirely too much time, and it would be over 200 million tax returns, and the sheer manpower of that would be just incredible and impossible. So what the IRS does is it takes individuals who have tax returns that don't make a lot of sense based on how much money they've made, or who are claiming exemptions or credits or deductions that are odd for their job. Or sometimes they just pull you out of a hat and they say, hey, we're going to audit you. And an audit is essentially where they take a look, they go back over your tax return and make sure everything that you filed and everything that is in your tax return is truthful and correct. Lying on your tax returns is not a good thing to do. All right, so make sure when we're filing those tax returns we are being truthful and that we are doing the best that we can to give accurate information. Usually this time of the year I'm helping a lot of you frantically prepare some of your tax returns. So if you are filing your tax returns, I won't be able to help you a ton because I won't be able to sit next to you and see those types of things. But if you do have any questions, again, office hours are Monday through Friday, 11 a.m. to 1 p.m. So join in there and ask away, and I will do the best that I can. So again, those audits are to ensure the validity and investigate some criminals for violating tax laws, as our friend Al Capone here found out during his lifetime. All right. So what other kinds of taxes do we have? Because we have more than just income taxes. Well, there are things called social entitlement programs that exist here in the United States. The most common ones are Social Security and Medicare. Those are the two most common social entitlement programs that we have here in the United States, and many people in the United States depend on those to function. So one thing before we get to corporate income tax I want to talk about here is this right here. These are still the same in 2019 and 20, so I didn't change the bracket here. But one thing that's important to note here is that the employee is responsible for 7.65% of the social entitlement programs. Now that is 6.2% of Social Security and 1.45% on Medicare earnings, for a total of that 7.65%. So that is going to happen. However, when an employee pays that 7.65%, they're actually only paying half of what is required. The employer pays the rest of that portion. So it's important to know, and that's why I put this in here, is that if an individual is self-employed, you are responsible for both portions. You have to pay 7.65 for being the employee and an additional 7.65 for being the employer and owning it. Okay? So it is very, very crucial to understand that when you are self-employed, you are responsible for the employer portion of this tax as well. Okay? So this rate can change a little bit. So if we go down here, there is a maximum on Social Security contributions. So Medicare, obviously, there's no limit because that's something everybody qualifies for after they turn 65. Social Security, however, can only charge 6.2% of your income up to the first $118,500 that you earn. So once you hit that, you are going to be paying no more. So you would pay 6.2% of $118,500, and then you would pay $0 in Social Security for anything in excess of $118,500. And that is because individuals who make more than that generally will not collect Social Security later on in life. So corporations have to pay income taxes just as citizens do, but there are a few exceptions. Some of those are those 501c we talked about earlier. There's charity organizations in which you give them money, you get a tax deduction. Colleges also do not have to pay corporate income tax. And the most controversial of the bunch, at least according to laws that are currently proposed or being discussed, are churches or religious organizations who are exempt from having to pay income tax as well. There are a lot of groups encouraging churches to do so, and there are a lot of groups obviously on the other end that are saying churches shouldn't have to do so because freedom of religion is a protected First Amendment right. So that's always a good discourse, a good discussion to talk about whether an individual's right means that they shouldn't have to pay taxes or whether they should have to pay taxes, because those nonprofits and colleges don't typically fall under any of those Bill of Rights or those other amendments that we've discussed previously. So that's always and something that's fun to talk about, to get a conversation going about. So, but as of now, nonprofits, colleges, churches, etc., don't pay those income taxes. So, those social entitlement programs are also sometimes known as social insurance taxes, which include Social Security, Medicare, etc., which can also include Medicaid, welfare, and food stamps programs that might be being used by individuals who are being hit by the COVID outbreak as we speak. So it is the employer's responsibility to deduct those social insurance taxes directly from your paycheck. But they're also, as we talked about in the chart above, responsible for matching the amount deducted per employee. So again, your employer is going to pay 50% of your contribution for those social insurance taxes. Unless you're self-employed, then you have to pick up that percent yourself. They follow what's known as a regressive structure, which is the opposite of a progressive structure. That means the more you make, the less you pay. Now, Medicare obviously has no limit, but you also have to remember it's only 1.45% of your earnings. Social Security, however, is 6.2%. So if you make greater than $118,500, you're going to pay less taxes on your income by 1%. So if you make $1 million, they're still only going to ask you to pay 6.2% of that first $118,000 there. So you would end up paying less percentage-wise in your taxes because of that regressive structure. Last tax we're going to talk about today is the excise tax. We've talked about this informally in class, but here we are. It's time to talk about it a little more formally. And excise taxes are taxes on things that are manufactured, transported, or transportation industry itself, the sale or consumption of goods. It's called an excise tax, and these are generally on things that are considered by the government to be things that you don't necessarily need to survive. So I'll give you a perfect example. If you go to a McDonald's and you order a sweet tea, you will be charged $1.07. If you go to McDonald's and order an unsweet tea, you will be charged $1. The difference there is that the first drink is sugar. It's a lot of sugar. And they're saying that you don't necessarily need that. Same with coffee. A black coffee will not be taxed, or coffee that gets added cream will not have an added tax. But a cappuccino, a frappuccino, anything that could be purchased at a Starbucks or a Dunkin' Donuts that isn't regular coffee or espresso can be charged that. So there are a lot of different things there. The same can be said for dine-in food, which of course we all love and miss very much. But dine-in food can be taxed, whereas carry-out food cannot be taxed. That's not always the case. Many states tax that carry-out food as well, including the Commonwealth of Virginia. But Ohio does not charge a sales tax for carry-out food. Ohio also, at the beginning of the fall, around the August time, back to school time, they have what's known as a sales tax-free weekend, which allow citizens of Ohio to go to stores and purchase goods for back to school, including school supplies, clothing, and certain shoes, tax-free. So you wouldn't have to pay sales tax on that. So keep your eyes open around August for that sales tax-free weekend. Hopefully, roll out of our houses and moving by then. So a couple other examples here are cigarettes, different tobacco products. Liquor is also excise tax. Gasoline is very highly excise taxed. Governor DeWine recently supported a pretty sizable increase in gas prices recently, but you wouldn't know it based on the price now. Gas prices now look closer to what they were in the early 90s than when I started driving in the mid-2000s, when we were looking at about $4 a gallon for regular gas. That's no joke. Airline tickets are also excise taxed, but, airline companies got their own problems right now. So This is basically all the stuff that you could do in your life that isn't necessarily pertinent for you surviving. All right. So that's all we're going to get to today. Make sure you check on Google Classroom. There's going to be an attached assignment to complete with this video. Please stay safe, everybody. Wash your hands, and we will see you next week.